What's going on, everyone? Good morning, good afternoon, and good evening from wherever you're watching this. This is a trade review on the trade I took on the trades I took on the 25th of April, which is basically Wednesday. Um, yeah, this week was started off a bit shaky. Missed the trade on Monday. Um, Tuesday was more of like a break-even day, I think. I think it was a 1 hour or something like that. And then for Wednesday, I ended the day with a break even on Wednesday. Then Thursday, I didn't do much in charts. Then Friday, that was the very good day. If you were on my Instagram, you would see what I did and the trades I took and how I came about it and so on and so forth. This would be my last educational free tip post on YouTube. Everything after now will just be live trade videos of what's it of just basically live trade videos. So yeah, on Wednesday, I was trying to long the pound dollar to certain levels, and no, it wasn't a great day. But I just want to review this because when I say that, I'm not always joking about it. The things you get to learn from most are your losses. I know most of you would expect me to show only my wins, but I do take losses. I do have strings of losses, not just one, not just two. But the thing is, with the way I trade and my risk management and my skill set, I do not fear my losses. It comes and I'll take them full head on with my chest and I'll just bounce back from it. So yeah, this is a trade review on the loss I actually had and what I would have done to uh end that day better than what I had. So yeah, it doesn't happen often. Most people do not talk about their losses, and I can get that. Like it's a normal human thing. No one wants to talk about a losing day or a losing trade or whatever. But as I said, I'm not out here to bullshit anyone or to sell dreams, sell gold Lambos and all of that. But yeah, so let's just get to it. So this is the 15-minute chart of the pound dollar. Now the idea I had behind the trade I took on Wednesday, which is basically here we have Monday, Tuesday, Wednesday, Thursday, and Friday. Now, if we're looking at this, the idea I had behind it was in my head, I was thinking this here should have been the intermediate low of the week before whatever unfolded on Friday happened. So I was expecting this to hold as a low, and I was looking for liquidity above this high right here, this high right here, and then this. So this was where I was looking for liquidity. I was looking for liquidity out basically one, let's just call it 140 level. Let's take this off. There's not much difference in here and here. So I was looking for the liquidity at 1400 level, which is basically round numbers. If you know me, I work a lot with institutional levels and round numbers. Now looking at this, I was looking at this little block we have here, right? So if we mark that out in time, so when price first dipped into this, I wanted to see a push up. Now that's when I saw the first price trade into this level. Let's go down to the 5 minute. When I saw price trade into this level, the first thing I wanted to see was a push above this candle, a retest of it. Then I would go for higher prices, finally get into 140 level. All right, cool. Now this just goes to show that no matter how good you get, you also get to make some knob mistakes. Why? It's because we're humans. I do not do mistakes such as maybe I'll blow 10% of my account or 50% of my account or do something really stupid, right? But I do get to make some cheeky mistakes that when I look back at, I'm like, oh yeah, that was some dumb shit you did right there. So, all right, looking at this, I had in mind saying when price just push above this candle, that's where I want to find support level and then push long for higher prices going for 140 level. So when we had the first wick of this level, basically we wicked it, but we never closed above it. So I was thinking when price comes back down to this level, it would basically find support, right? I was thinking to basically find support here. And before I even go on further, let me put on the trades I took for this week so you could see this is, I'm not just making this up. So apply the first, the second, and the third one. All right. So yeah, so you can see I basically went long somewhere here. If I change this to the 1 minute chart, it will probably show exactly where I entered from. So yep, you can see. So I went long exactly at this point, right? I went long exactly here, and it took me out. So this is why I say if price wants to take me out, I want it to take me out quickly. Like take me out like a man. Let me know what's happening. I cannot be in trades for 2 hours not knowing if I'm gonna get stopped, if I'm gonna make money that day or not. So when price came back to this level, I took the long and then I got stopped out. So automatically this was a -1 hour. Now, as soon as it took me out and then price closed above it, I quickly realized that I did something very novice like, and it's not something I should have done, because ideally I had this level marked out where I wanted to see a longer this level and then prices push higher, but I didn't get that. And then I started coming up with a new trade plan of how to be smarter, and most times we get to do some of these things. I do not do it often, but when I do it, I would basically put myself in order. So when this happened, I told myself, all right, now I started the day nice, and now I'm already down a percent, which is what I should have avoided from the start. As I always say, I'm always risking a percentage on my trade. Sometimes a bit less, maybe because of the spread. Sometimes a little bit more, maybe about 1.2, because I pay commissions for the spreads I have, which is worth it for me. Because since I really tight stop losses, I cannot bother with large spreads. So looking at this, price is taking this level out. So in my head, this is going to stop run. Liquidity has been taken further into the level I was looking to hold as a support level. So now that liquidity has been taken further into that level, we started seeing prices push higher. All this is when I didn't follow my trade plan. So all this wick and stabs above and under this level, I didn't care. This is basically the market walking levels, putting in buyers, taking out sellers. Basically, that displacing orders, right? Now, when we finally got a break above this candle right here, as soon as price dipped back into this, as you can see, I cannot make this up. I got my entry here, I had my stop loss here. So if we were to apply the risk to reward on that, must have been yeah. So it was about a five. I think it was a 5 pip stop loss. I think. Yeah. So from here down here, yeah, it was about a 5 pip stop loss. So I had a 5 pip stop loss, right? And I wanted to see 140, 1.400. So now when this happened, prices started pushing higher, my trade was in profit, and so on and so forth. Now, and I have a rule about I break even my trade when it hits a certain level. I'm not going to disclose that right now, but basically, I went long right here, and then prices started pushing high. Now, when we started having this consolidation back here, I'm thinking it's one more chance for me to get a compounding position. So what I do is quickly I break even my other position. I break even my other position. Most people always have issues with compounding, and I'll just give a free tip here. When you are compounding, try and learn to what's the word I'm looking for, to secure your previous position before you open a new one, because that's what happens to most traders. They're thinking, all right, cool, I'm gonna compound here and da 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 da. But then the thing is, when they open a compounding position, right, they haven't secured the previous one. So if price, let's say they have 3 positions running, if price takes them out, they do not lose one thing, they end up losing 3 things. So let's say you were risking 2% on the trade. Let's say you were that sure of risking 2% on the trade, right? So you're someone that risks 2% on the trade. So now you have forgotten at the back of your mind that if price runs all your positions, you will lose 6% instead of 2%. So my idea of compounding is, if you want to compound on a trade, I say you want to risk 2%. Let's say you want to have 2 positions to trade. The best thing for you to do is risk 1%, then another 1%, knowing that you're risking your full position. Or if you're risking 2% before you open another one, break even your trade. Some people do not like moving the stop losses, but this is just something that I learned from experience, because I would always try to compound. And when it works, it will work really nice. But then when it goes bad, it will go really bad. And I wouldn't just understand why I'm losing so much money. So when I realized that I was sometimes I would have 4 positions on, right? I was very truly happy when I started. So when I had 4 positions on in the trade, when prices want to take me out, it takes me out. I would basically lose about 8 to 6%, and I'll be wondering, oh man, I've literally lost all I made this week. So that's just my tip. So, anyways, when I saw price coming back down to this next level where I wanted to go long again from, I basically broke even my trade. When price dipped into the next order block after a break in structure, I opened the new trade right here. and then prices started pushing higher. Now with this new position, I had my stop loss just here. So basically, I had a 3 pip stop loss, right? So this new position, I wanted the same thing, 1.4 100. So basically, I was thinking if I get a 9R and a 13R, that would be up about 22, if I'm not wrong. Yeah, 22R for the day. So, or for the week or whatever. So that's what I was aiming at. But then this is what I mean by you have to review your losses. It's not something that is nice. No one really likes doing it, but you have to do it. Do it and get it out of the way. Learn from it. Now, when I did this, I was expecting higher prices, and price had hit the level where I would break even my trade. So quickly, when we had this push up higher, I broke even my trade. Now, something that I didn't take note of was basically price had hit a level where the market would displace orders. Now, if you do not know what displacement of orders is, it's basically a level in price where if the market runs to that position, it will displace orders. Now, what do I mean displace orders? To put in buyers, to take out sellers, it to take out buyers or put in sellers. It's basically, you could call it a swing high or swing low, whatever level you want to call it. That's all up to you. For me, I use certain levels to know when market displacement is about to take place. But in this particular scenario, I did not notice it in time. And this just goes to show you that no matter how good you think someone is, they do make mistakes. Most people don't want to talk about it, they want to come up perfect. But I'm going to be honest about it. I did not see this happen when I was trading because I was wondering why is it coming back to me? Because ideally, after this move from here and this move from here, prices should have just pushed higher. This was basically telling me that, oh, it was giving my normal sign of the kind of trades I take. So when I saw this candle wick above and then I saw the next bearish candle, I broke even my 2 trades. And I knew that if price comes back to this level right here to 1.39570, I was wrong about the trade. So what I did not take into consideration was here, where we have this little bit of a flat market, if that's what you want to call it. This little bit of a flat market right here. So this level, which is basically basically let's just call it 1.39668. I kind of just deal with numbers that are not balanced. So let's just call it 1.3967. So basically 1.3967 was a level that the market was looking to displace orders. So what it did basically was people that had buy stops here, it had put them into the market, executed their limits. What it does is to displace orders and limits. So it had put them into the market and now those limit orders are actually active market orders. People that were short on this trade, so double top, put their stop losses there, it has taken them out of the trade. I'm talking about people that were short on the trade. So what the market does is, even though you were right about your bias, it will try to fake you out or take you out one last time before it does move. So people that were short on this trade probably had the stop losses here. The market is taking it out. Now, ideally, I do not know exactly everything. In as much as everyone tries to come up with like, oh yeah, I know where the market is gonna go. I always say, no one really knows. We're all speculators, right? Just that your technique might have an edge, which is all what trading is about: finding an edge in the market. Because you have to understand that no matter what technique you were using, believe me, it will fail at some point, and then it will have a string of failures at some point, that's where risk management comes into play. So I will not come out front and be like, oh yeah, I knew where the stops were exactly, or I knew where the dismissive orders were. I have a technique that helps me know probably 9 to 8.5 times out of 10 where market reversals and so on and so forth is meant to happen. So anyways, this place right here, this place right here was where the market was looking to displace orders and limits. So it has activated buy stops, taking out stop losses, and so on and so forth. So what happened basically is it has taken out liquidity from that point, and then it's going to gear the other way. So now it has been in an uptrend for a cheeky amount of time. I was in the trade. It took out the the orders at that point, took liquidity, and then went the other way. Now, is it that every time the market displacement happens, it's a reversal? No. Now the question is, from your understanding of price, you might get it whereby you are in it, you get the reversal side of it. But sometimes the market displacement could equally be it takes out this high, and that's when you start seeing the energetic move of boom, 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 just goes high and then hits 1.40. All I'm just trying to say is it's all just a speculation game. But in this case, it was a reversal side. But the funny thing was, I did not even notice this when the trade was unfolding live. It must have been after I got taken out that day. I sat back and looked at it and I was thinking, because ideally, this shouldn't have happened. So what happened was I got taken out of this position for break even, and this other one I got stopped out. You could see for 1 hour. So what I did was I pushed my other trade into a 1 hour, and then this other one at a break even. So what that did was it basically mitigated my loss for the day. So I ended the day at a break even, and I wasn't happy with that because I was thinking to myself, and as much as well as like, oh yeah, don't look back on trades, you have to look back to learn from. Because I was thinking, oh shit, I would have closed it for a 6 hour, mitigating my other loss and being 5 hour up for the day. But it is what it is. It had already happened, took me out, and that was me being done for the day. I just sat on my hands till Friday, which is when I took the shorts on cable, and everything is on my Instagram. So all I'm just saying is, learn to look back at your trades, learn from it, understand why market does whatever it does. Don't be one of those people whereby when you take a loss, you say, "Oh, yeah, it's the market's fault." Nah, it's your fault. Because if I had closed this trade here, I would have banked something, right? So this just goes to show you that I take losses. Everyone takes losses. So just learn to understand what the market is all about. Learn how to understand risk management and trade management. That's if you're a day trader. If you're a swing trader that swings trades for 800 pips and you do not have to actively manage your trades, that's fine. Everyone there's so many ways to skin the cat, so you don't have to actively manage your trades to be a profitable trader. But ideally for me, since I am more of a day trader and a short-term trader, I have to actively manage my trades. That's just it for me. But yeah, so this is it, and everything after this will just be live trade videos and loads of nice music. So yeah, I hope you guys all had a good trading weekend. You do your arse in the market. So have a good weekend, guys.